We're here today with Thomas Hellmann. He's a professor of entrepreneurship at Oxford University, Saïd Business School, and today we'll talk about an important decision entrepreneurs and investors face when they run companies, is whether to sell the company at a certain point in time to a corporate buyer, for example, or to continue to scale the business and build maybe a larger business. And so this is an important dilemma, Thomas. You have done some work on this dilemma. And so could you maybe explain what exactly is the scale versus sell dilemma? And then the question is also, whose dilemma is it? Is it the entrepreneur's dilemma? Is it the investor's dilemma? What about the employees working in these companies?
Yeah, so I think the interest in the decision to scale or sell is it's a really nice topic. It's a good dilemma. In entrepreneurship, there are many dilemmas, which is, do we close down or do we survive? This is actually companies that are doing well and that have the real possibility of saying, well, we've built a company, say we've got 50 employees, maybe we've got 100 employees, but we could be becoming 500 employees, or we could be moving from a $50 million to a $500 million business. But the decision is quite important because it determines obviously the future direction of the firm. And there are many reasons and many pressures for a company to actually not scale but sell, because by many measures it's the easier decision. The key question is, who makes that decision? It's an important decision for the future of the firm. Is it really the founder? And when we think about startups, we typically think, well, it's the founder who makes all the most important decisions. It turns out that that's really too simplistic. And there are many people who weigh into the decision within the company. There's the founders, but there's really sort of the board of directors. There are the investors. And then importantly, it's really the environment, or what we call the ecosystem, that plays a very large role in whether companies continue to pursue a very ambitious path themselves or get acquired and therefore integrated in some larger entity.
And why exactly is it a dilemma?
It's a dilemma in the sense that the implication of that choice are quite significant, not just to the founders themselves, but to their employees and to the local economy. One of the important reasons why we care so much about this question, do we have enough scale-ups, is that they benefit local communities. And the people who work in them may take different career paths depending on the choice between scale to sell. And so I think there's a lot of responsibility on the founders and the people who make that scale to sell decision.
And why you said it's sometimes maybe easier, the sell decision. Why would you consider that to be easier as compared to the alternative?
It's much easier. It's the bird in the hand versus two on the roof. And the two on the roof, they can still fly away. And there are many companies who have attempted to scale and then completely failed. So if you're an entrepreneur and you spent the last 7 years, basically working 24 hours a day and, almost having no food in the fridge because you're just putting all the resources into building this company, and suddenly somebody offers you a 50 million check, it's the easiest thing to take the check. Refusing that check and saying, actually, no, we're only at the beginning of the story. We've only been doing this for 7 years, but we're going to grow this for another 7 years. That's a tough decision. And that's why the entrepreneurs often struggle with that decision, kind of need a support system and certain economic structures in place for them to really roll the dice again and say, yes, we're going to go big ourselves.
And now you're mostly talking about the entrepreneur, but what about the investor? Is it also a dilemma for an investor? Take a venture capitalist or a business angel?
Yeah, it's a big dilemma for the investors. And many, not all, but many investors also have a strong temptation to sell. It is much easier for them in the following sense, that if you're running a venture capital fund, you want to show your successes. There's a huge pressure often coming from their own investors, the so-called limited partners, to not just say that they've got a good portfolio, but actually prove it. When you sell a company, you've got a proven return on investment, and that really helps you in raising maybe your next fund. It really helps you in sort of fortifying your relationship with your current LPs. So having those returns on the books is very attractive. Now you have to be a little bit careful, because if the expectations of your investors were that you're going to create $500 million exits and you're creating $50 million exits, yes, you've got something on the books, but maybe you weren't ambitious enough. So it's not a simple choice, but the decision to scale requires a certain courage by the investors, and very importantly, it requires an ability to wait longer. And especially in the current venture capital model, that can be challenging because most funds have a 10-year duration, and if you really want to scale, your companies may exceed that 10-year duration, and that causes a problem for the investors.
And so you talked about different types of stakeholders who have an impact on that decision. So what are some determinants of then whether the company will be sold or whether it will remain independent?
So if you look at the core of the decision, the actual decision whether to accept an acquisition offer is made by the board of directors of a company. So that's the founders, that's typically the investors, there may be a few other people on the board of directors, there's a responsibility to employees, but that's the core decision, and there are a lot of forces that impact directly on that decision. What is less obvious is when that board of directors says, are we going to accept the offer or not, the alternative is to go into a scale-up ecosystem to say, well, we're going to actually build this company. What are our chances of succeeding? What is the funding that we're going to have if we continue? What's our access to talent? Are we going to build the right management team? Do we have the right infrastructure? All of these challenges weigh in on the decision by the board of directors, but they're really determined by the broader economic environment, or what we call the ecosystem. And so I think one of the key questions, which we haven't fully faced yet in Europe, is how do we build scale-up ecosystems? What is it that we as a country need to actually allow these companies to achieve their full potential?
And so when you talk about these ecosystems, then do you see big differences across countries, regions? We have the US, we have Europe, we have the UK. Do you see a lot of differences in that decision?
So there are enormous differences. Now let's roll back 20 years ago. 20 years ago, Silicon Valley and the US, they had an amazing venture capital system, and everybody in Europe was saying, oh, we're never going to be able to do that. There is no startups, and they gave hundreds of reasons why we couldn't do it. And 20 years later, we have a startup ecosystem, and most of these reasons that we said were wrong. So these ecosystems can be built. I would say in Europe, we are 20 years into a 40-year revolution. And the first 20 years were about building startup ecosystems, and the next 20 years are going to be about scale-up ecosystems. And there's a simple logic that you cannot build a scale-up ecosystem unless you actually have the startups, but it is a separate step. It does require different kind of support mechanisms. On the financing side, I think the talent side is very important. There is a cultural element to it, and there's going to be a policy element to that too.
So you're saying that in the US we would see many more companies that are being scaled.
In fact, some people have argued that the competitive advantage of Silicon Valley is no longer startups. It used to be startups, but today startups coming out of everywhere in the world, and really strong startups. But they migrate to Silicon Valley. And this continues to be a problem, that some of our best companies, they move to the Valley or other parts of the US, but especially the Valley, because they have the best scale-up ecosystem. They've got the talent, they've got the capital to actually take these companies and turn them into unicorns, into massively scalable companies.
So that's some kind of arbitrage across ecosystems.
Very interesting. The word arbitrage is actually quite relevant, because what we're seeing for the moment in Europe is an influx of American investors, also acquirers, who are aware of that arbitrage, who are saying, well, you produce really good startups, but you have no idea how to take them further, and therefore they can actually play an important role for us to build our own scale-up ecosystem.
Yeah, all right. If we go back to the decision of scaling versus selling, it's clearly a dilemma. Are there any blind spots you see when investors or entrepreneurs have to make that decision? Are there any blind spots, things they neglect when they have to make that decision?
It's hard to say a blind spot, because these are clearly intelligent people, but one of the things that matters, and we've seen that when we build our startup ecosystems, is the role of mentors. People who can say, it's okay to take this risk. I know you're risking a lot here, but there is a logic. For the moment, we have that in the startup ecosystem. If you're a young entrepreneur, you can get great mentors who help you to think through all the challenges of starting the company. We're going to need that with scale-up entrepreneurs, and that requires people who have done it. So what we don't have for the moment, and where I think we have in some sense a blind spot, is really the vision to say we can do this. It's a hard work. We're going to have to get a lot of things right, but do we really have the support environment to allow these entrepreneurs to double down and, continue growing?
And if you then look at this decision, scaling versus selling, I'm not sure whether there is good research on that, but do we know which one typically, from a financial point of view, will deliver the highest returns?
It's a great question, and you're going to get the answer from an economist, which is always frustrating because there's one hand and the other hand. But the way to actually think about that is that there is a market mechanism in which people are making intelligent choices, and so by forces of equilibrium, we would expect that these returns, or the expected returns, weigh out. Specifically, I think the key question is, what's your risk-return profile? And the less risky decision is selling, the more risky decision is scaling. And so the returns on scaling will be much higher, but the risks are also higher. I think that's probably the best answer to that. I would say that we actually don't have good data on this for the moment. And I think that continues to be a challenge, that for the moment we're not very systematic in collecting all the data about the scale-ups, and so we don't always have the good return data.
Yeah, because in some cases, clearly the sell decision is of course counterfactual. You see a lot of entrepreneurs, if they would have sold, they missed a big opportunity, and then they're there and faced with a new economic environment. And but it's a difficult question it's a very important question, not an easy one.
Let me add to that, because what you then hear is the people who sold and have regret and said, God, I could have built a bigger business. But I've also met the other side of the equation, where entrepreneurs who scaled and they said, I lost it all. And that does happen. The risk that you scale it and fail is still there. And that's always the hardest story to get. Failures are always the hardest to research. But we just have to recognize it. If there's risk, there's going to be failures.
And do we see, so we talked about differences across ecosystems, across regions, countries. Would you see any differences across industries? We have high-tech versus low-tech. We have B2B versus B2C. Any elements there that would impact that decision?
Absolutely. I would actually say that by some measure in the non-tech business, the scale-up environment is already more established in every part of the world, but certainly in Europe. I mean, we've had industry for hundreds and hundreds of years, and in the low-tech, if that's, in the broader industry, there is a fair amount of expertise of people who've grown businesses and who can now pass on that knowledge to the next generation. In the high-tech world, some of the scaling is different. It's global markets, it's very competitive, it's got the technology element. And within high-tech, there are huge differences. So on the one hand, for example, we're here in Ghent, it's got a strong biotechnology. Well, in the biotech sector, the decision between scaling and selling is extremely well defined because the metrics are so well understood, the steps of building a pharmaceutical drug or a medical device are so well defined that we actually have quite a lively ecosystem, and it's really well understood what it takes to scale or sell these businesses. And by the way, the acquisition market works extremely well. Now take a different industry, let's talk about climate tech. It's a really young industry. We don't really know what climate tech is. We think there's going to be massive scaling opportunities. A lot of this is hardware. They're going to need hundreds of millions. So scale-up is going to be a really big issue. But there's no ecosystem there. We haven't done this before. It's a new industry. We don't even know who the acquirers are going to be, who are going to buy some of these climate tech startups. And we have no idea how difficult it is to going to actually scale some of these industrial plants and things like that. So I think there the challenge is much bigger.
Yeah. And so clearly, this is a big topic for governments. governments that are investing a lot in the ecosystems, in the startups, through subsidies, but also through investments. Of course, they want to keep these economies or these economic activities, they want to keep it as much as possible local to help the local ecosystem flourish. But of course, they are frustrated, a lot of these governments, because companies are sold at a very early stage to foreign investors, and often head offices, they move. I think we have many examples here in Belgium of companies that moved their head offices to New York, to Silicon Valley. How can governments deal with this question? What can they do? Is there anything they can do?
Lots of things they can do, lots of things. Let's start with data. I'm delighted, there's a European Scale-Up Institute that's basically based out of here in Vlerick, and I think that's really important, and getting the facts and the data is the first step. There's something similar in the UK, the Scale-Up Institute that I've been involved with. I think that work is extremely important, because without data we're just going blind. The second thing is, I think we can strengthen the domestic ecosystem, and that means worrying about, do we have barriers to finance, scale-up finance, do we have barriers to talent, to leadership, infrastructure. These are the kind of domestic agendas. And then there's precisely this question about, well, what about foreign investors, foreign acquirers? And I think foreign investors is a no-brainer. They help you, they bring in capital. You always want to welcome them. Where things get more difficult is with the foreign acquirers, and it's very easy that they get a bad reputation, a bad publicity, because it looks like they're just taking the company and taking it out. I think we have to be much more nuanced about that. I think if they're taking the company, they're paying something, they're bringing resources into the ecosystem. And unless we have good returns, our scale-up system is essential. Our startup system relies on good exits. And if we start disinviting or discouraging foreign acquirers, we might be killing much more. So I think it's extremely easy to become polemic about saying, oh, foreign investors are bad. They play a very important part in the ecosystem. But there is a question, how can we make sure that the talent doesn't just walk away, that there's a huge brain drain, and that there's something that comes back? And that requires patience. One of the most interesting stories in the UK was the acquisition of DeepMind. So Google bought DeepMind and wanted to just move it to Silicon Valley. The founders refused. But the key step was that Google said, actually you can stay, because we can see that there are some real advantages of this company remaining in London, and there's enough of an ecosystem here to support and build something significant. That's a really significant step.
Yeah. So there's clearly positive spillovers through these kind of foreign acquisitions. Of course, you need to manage them, you need to provide the infrastructure. Any negative spillovers that we tend to neglect?
Look, in all of this, there's always negative spillovers. I think the area where this has become very politicized is anything to do with national security. And I think there are some obvious negative spillovers there. If you're basically selling, your national security to foreign nations, you have a problem. My worry with that is not that itself. I think that's very clear. My worry is that argument then gets used for things that actually aren't national security.
Thomas, so my final question to conclude, do you have any general advice to scale-up entrepreneurs on this topic?
That's a tough one. But I would say my first advice goes to the scale-up entrepreneurs 5 years when they're still a startup. And the first part of the advice is plan on building a scalable venture. Many ventures don't really scale because they haven't actually built the right infrastructure or the ambitious strategy at the beginning. So scale-up actually starts at the startup stage, where we're saying we're going to build something that is massively scalable. Now, if you're giving yourself that option, then there comes a time where you're going to have to make that decision. I think one of the key advice is that people think of it as very binary, which is I can sell and get the money, or I can put everything back in and risk everything by scaling the company. The advice is look for ways to take some money off the table and then scale. The biggest fear that people have when they're scaling is to lose everything they build. Now, this requires the cooperation of investors, but take some money off the table, pay down your mortgage, take a week's break and come back and says, yes, we're going to build the next big thing. But you need to have that safety and that support mechanism in order to say, yes, I'm going to double down.
That's a great piece of advice. So thank you so much, Thomas, for sharing all these insights. Thanks a lot.
My pleasure.